What up, everybody? Good morning. I am going to be doing a ton of charting in this video. This is more going to be an explanation video regarding TXC. The price has been going down pretty steady as selling is outnumbering the buying. Um, Not like a crazy number. It's really smaller than it appears, but with the price going down, it makes it look really bad. But what that's bringing is a ton of people who are naysayers and I told you so, people who are looking for something to fail. They have no skin in the game. They aren't doing any research really other than they see that people were making a ton of money and now it's slowed down and now they're looking at the opportunity to point and claim that they were right the whole time and that's why they never got in. These type of people are pretty annoying, but they're very common. Not just in crypto, but especially in crypto. There are still people calling Bitcoin a Ponzi scheme and waiting for the crash to zero to say "I told you so." And there's less and less people who believe them. Even in the stock market world, I follow Intel very closely. Uh, they make 80% of the CPUs in the world and control the market. But when they left their CEO or removed their former CEO, and the price fell over in an over exaggerated manner, as things often are exaggerated or an overreaction to say, people were calling for them to go bankrupt. One of the largest tech companies in the world, and people were sitting there saying that they were going to go bankrupt. So here's what one of the naysayers that's going around Facebook and spreading some stuff. His all of this is his Chat GPT, and when you're using Chat GPT, rarely, it's not very accurate. It relies heavily on Reddit and other kind of social sources. You have to really direct it and continually put an input, direct it what websites to go to, give it information that you found, and let it confirm that information on the internet. Using it multiple times. When I first started using my Chat GPT, it was leery of TXC. And now that I've used it more, I continually update it with new information. I continually update it on the charts and with the direction and what's causing. Um, my Chat GPT is very confident in TXC. But this guy's obviously is not because he just started using his Chat GPT probably. And then he's also telling it to look for reasons to be a scam. So it's one of the things whereas if you are looking for a red car, you are going to find a red car. So let's kind of counter some of his arguments. Some of these do have some meat on the bone, and there is some merit to them. But you got to remember that TXC is on month 20 or 22, so it is still a very early project. But let's get into this real quick. So he posted a chart and talking about the massive straight up pump, a manually pushed liquidity. Um, what happened was there was a promo in September that required TXC as part of the reward, and TXC itself didn't own enough TXC to distribute the reward based on how successful it was. It was more successful than they anticipated. So they had to go into the market and buy up the supply in order to give that reward, and that caused the straight up kind of run from January through September. You really only saw TXC on DexTrade and Bitmart. There was very limited activity. There was very small amount of people. I mean, there's probably maybe 25 people actively trading it, and they were trading small amounts. Little buys and sells, just kind of learning. The whole point of the DexTrade and the exchanges at that time was purely um, to learn how for when TXC got bigger, and it was always that, and it was never anything really massive as far as creating a market, creating the supply, creating the resistance and the zones throughout the chart. So looking at a chart right now for a 22-month-old project that has really only been on any kind of exchanges and had enough trading volume since October. And we're talking 2 months of trading volume is all this chart really has, And so there is quite a bit of manually pushed liquidity because it was a proof of work coin that started from zero. No coins were in the market. The only way to get the coins out of people's cold wallets and into the live market to create a value base around the coin, you have to entice people to sell the coin. And so that's where the liquidity coming in, and the liquidity that we're talking about is that this part is the actual money. The liquidity is being added. There is money being added directly in to entice those coins out to create a value. So they needed the early miners to sell. If everybody was just mining and never sold a coin, there could never be an established value. So that's where that huge wick come in. This is, the claim that it's insiders sold hard into retail. It wasn't. It's not that. The whole drop down is based off a small amount of some sellers who were still active, but it was an even smaller amount of buyers. Because nobody was placing orders at $5 or $6 at that time, the algorithms and the market has to fulfill an order. So because the demand was overly demanding, where they were buying up all the coins that they took, it took all the way up to $7 to draw out those sell orders because people did not want to sell. And that's why the price went up so high to 7.15. And then once that demand was gone and there wasn't a crazy need for the coins, then it was settling back into the live market or to the investor people who are looking to buy coins on the market, and it was based on what price they were willing to pay. And as that faded down, it came back into its established zone, and the buyers are in this 250 to 350 zone is where the buyers of TXC are. They're not going up to 4 yet. They're not going up to 5 yet. So that's why the price is here. But it wasn't insiders. There's not early whales. Nobody's cracked their coins. The top 100 list is still intact, and most of them are getting bigger daily. So this is not accurate. Permanently shifted into lower highs, lower lows. Correct. The price was mechanically coming down. Algorithms obviously helped influence it. The market makers and the bots were keeping the price somewhat up, fulfilling orders on the way down, so it didn't go from 715 to 250. Like, it has to trail, it has to snake down and come back into it. It's not that the supply is controlled by a few insiders. So this is an inaccurate statement because it's assuming that this is an established project. It's the fact that the activity is in a small amount, and it's not just insiders. It's there's a small amount of activity in the market. You could really look at, there are 55,000 people who are receiving coins, and there are maybe 50 people who are actively trying to buy and consume coins. And of those 55,000 people who are receiving the coins, they want to get profit. There's a ton of people who have high hash power who are getting, between 75 and 175 coins a day, and they go and place that sell order. And then you're getting people who come in and are only trying to buy $50 to $175 a day, which, there's no, it's no like you guys aren't buying enough or the market's not buying enough. It's it's the consistency. Those guys are getting their coins every day, and the buyers are whenever they can afford to right now. It's just not an overwhelming momentum yet. So prices manufactured to attract new seat buyers. This is kind of partly true, but it's not to attract new seat buyers. The liquidity injections are actually to create a circulation of supply there to draw the sales. The whole point of the liquidity injection early in this, through the first, let's call it 18 months, was to get coins out into the market. Now that the coins are out in the market, you got to help support the price, and the market exchanges and buyers have to come in and establish a price that's continuing to go up. And often they're going to be outmatched because there are so many people who are receiving coins, and there's not a ton of outside liquidity in there. It's purely just miners. There has to be a nudge supported to help hold the price up, to show the value of the mine. Like, hey, we have this mine that is worth this much, we're saying that this mine is worth, essentially $3.25 a day right now. We want to show you that it's consistently growing month over month. That's why the price keeps getting pushed up, because we've sold more. The mine is going to get bigger. The mine is going to get bigger, and it's going to be more valuable. So it's not manufactured like they're pushing the price, but because of the cash flow coming in from the mine sales, there's an ability to support the price up, but only temporarily if the market itself accepts it also. So right now we're looking at like a 2-to-1 sellers to buyers, and that's why the price continues to go down. Once there's people who are excited and are buying, and the buying is more balanced and that price becomes established, then when there's a support nudge, then the price can be supported at that price and continue to grow and find its balance and rhythm kind of thing. And then as it goes up, and then the nudge pushes it up to the next level, and then it's got to go back and forth again and establish its zone. But yeah, right now it's not manufactured for the seat buyers. It's testing to see what zones the market accepts. And right now, sellers are much more willing to be participants in the market than buyers. Once recruitment slows, insiders unload into the hype. So again, nobody is unloading. The large wallet holdings are still active. Those guys most of them are still getting. If we're taking a 55,000 participant pool, we're gonna say 1,000 are buyers and 4,000 are sellers, and that's less than 10% of the total amount of people that are in the project are participating in the market. And because more of them are willing to sell because they're getting a nice daily distribution, and they're trying to create that into a salary or to an income because of the work that they've done from selling seats and getting commissions and such, that it outpaces the buyers. It's just as simple as that. All this is going to just boil down to, and the buyers that are here, even on days where there is a little bit of positive momentum or the price is low enough that buyers are more active than sellers, they're still not buying at the market or above the market to push the price up. They're consistently wanting to buy the deal, and then they make a big buy. They buy $100 worth or $500 worth or $5,000 worth, and then they go back until they can get more money to come back in, instead of spreading that order into some consistency, buying every if you have $500 and then you're not going to have $500 again for the rest of the month, that $500 is stronger in 5 $100 orders than it is in one $500 order, if you're trying to influence positive sentiment into the market. Not telling you how to place your money, not telling you what to do, not financial advice, but if you are trying to encourage positive momentum, there has to be more consistency, and not the one shot where there's a boom, a quick wick, and then it comes down, because that doesn't change the algorithm. The pattern that it is right now, the sentiment is price is going down. So not accurate and not accurate. Yes, the tall green wicks are because people come up, save some money, make a big buy, but then they don't come in to buy again. They'll do a big market buy, price will go up to 320, and then everybody disappears until the price comes back down to 3. Somebody places a big market order, price goes from 3 up to 320, nobody buys. There is no momentum stacked behind it to continue. Yeah, so again, also because there has been barely 2 months of active market, and really probably 6 weeks of active market where there's any kind of volume and pattern to be established, all of these don't really exist. I'll show you on the chart what I'm talking about quickly at the end, but you can't really follow these. When you see lower highs, bullish attempts fade instantly. The chart's not going to be very accurate right now. Liquidity is shallow, 100%. This was a proof of work coin, started with zero pre-mine. There was nothing in the market. The only way to establish the market flow was to entice sales. Sales had to come first, then buys came in to bring the price up. Until buys bring the price up, after the sales are drawn into the market, then now buys have to come and scoop it up and build it up. Draw more sales in, scoop it up and hold it up. That's kind of how this starts, from a zero pre-mine. Only takes $10,000 to $30,000 sell pressure to nuke charts. We can look at the plus and minus 2% on coin market cap, and a lot of times it's a couple $100 can move the price two or more percent, just because there's just the order book is not full of orders. There's not a surplus of buy orders sitting on it because they're all either below, or they come in and it's a quick market order and then they leave. There's no steadiness to the orders. Um, and this is not accurate either. So because there's no liquidity, um, and there's no buying pressure, a seller can't come in and nuke this. They can only sell whatever is on the buying order. If nobody is there buying it, nobody can come in and dump 100,000 coins. It's impossible. There's not 100,000 coins on the buy order. They'll be holding the coins. So there's nobody dumping this. They can continually, the ones that are continually making the sell orders. It's 100 sell orders. It's 500 coin sell orders that get stacked up, and then the buy orders are in the 50 to 100 range. It's just outpacing, and the consistency is the key. It's not large whales, it's not large insiders. Most of those guys are all the ones that are trying to figure out how to get the price to go up, or wanting the price to go up. Yes, TXC is not traded enough to absorb the sells. That is 100% correct. Price is dependent on new seat buyers, kind of, because the value of the project is based on the project. If the project is not being built, then the project becomes what it is today. If you're looking at this from as somebody who's outside wanting to come into the market, you look at the future. You're buying this on what's going to be in 9 months. Markets are 9 months forward thinking. So in 9 months, do you think that the mine is going to be built up and complete and operating? And based on the path to 16 that everybody wants to talk about, everybody is so focused on the dates that magically the calendar was going to turn and it's more valuable. It's February now, so it should be $16, right? No, the part that has to happen is the sales come in, and that creates miners in the community that are willing to participate and buy the coin at the market because they see the value in the coin, and then that money comes in and is the backbone and the support to be able to help hold the price up that the market creates. So the miners have to come in and be willing to buy the coin to show that it's that valuable, and then the nudges are going to support. But if you're sitting there and you're going to say that you're not buying in the market, you don't want to buy the coin, that's fine, and then you're looking for the price to just continually go up. Well, it really depends on the thing getting sold. So if you have the conviction that you have to get in, make sure that you have you are able to pass that conviction on to somebody else to create that sale of another seat to get this filled up, because the faster it fills up, the faster the price goes up, kind of thing. So yeah, if recruitment slows, the liquidity disappears and price collapses. The liquidity that people are referencing that's in real estate is the store of value liquidity. That's the backing, the support of TXC. The liquidity that they're bringing into the market is cash liquidity. The cash flow liquidity is what's been the nudges. That's induced sales to create a circulation of coins in the market that people are able to buy, and then also to try to help support the price when buyers when buyers and sellers kind of meet that pivotal point, that the cash liquidity should support underneath that. The liquidity backing is in store of value, which is in Bitcoin, Ethereum, USDC, because you have to have that, gold, silver, and then the real estate. And everybody's really hung up on the real estate. How are we going to make that liquid to be able to put money into the market? That's a store of value to back it as an emergency. The whole point of that liquidity pool is not to use it daily. The liquidity and the nudge that they use to test the market is from cash flow coming in, not from those store of values. Those store of values are emergency. That pull the ripcord, and if we pull the ripcord, sell all the gold now to push the price up, it would do nothing other than let everybody sell some coins, and then most people would still get stuck with coins anyway. So that's not that's not the goal. The goal is not to sell the gold and sell the Bitcoin just to push the price up temporarily, because again, what we're seeing is that buyers are at this that I mean, I think it's even lower now, 225 to 325. That's where our buyers are. That's the window. That's what the price is. So until there's positive point of growth to where there's more cash liquidity to induce into the market, then they can't push it. And so this has to come from outside of TXC and outside of everybody. The miners, coming in and bringing in liquidity cash that they have from other investments or from other streams of income, bringing it into the market. That's great. That's boasting up this liquidity pool. What would be enticing is to get people who are not maybe necessarily miners right away, get them to come in and buy $100 worth of TXC and get their foot in the ground, and then see that it holds the price and see that it starts going up a little bit. Then they're like, oh man, I could mine this. You could pitch this sales pitch however you want to. People are sitting here trying to argue and say that the value is so low, nobody's going to buy a mine. Well, get them to buy $100 worth if they don't have $1,000, or get them to buy $10 worth. Get them to buy $10 worth a week. And then when they start seeing that the price is a little bit more stable and it starts going up, maybe that excitement gets them to buy a mine or buy two mines because now they've been in it long enough. But if the market price is more enticing, get them to buy into it. If they're not willing to do $1,000, tell them to throw $100 in the market and see what happens. And then once it goes up, with all those buys, because it wouldn't take much. I mean, $10,100 buys is going to push this price up really fast, and then that price going up is going to create the excitement again of more miners. More miners comes in, then that cash comes in, and then they can help support the price and circulate it as it stares up. So the chart that he had, support zones, green blocks where early buyers entered. Again, there wasn't a lot going on early. It was all on DexTrade and Bitmart to a handful of small miners, early investors, insiders, team wallets, early support. Price returns to these zones. These holders are now underwater. Psychological panic. None of these guys have panicked. No cold wallets are cracked. They're not selling. The waterfall phase. 420 to 5 is a dead supply wall. So it could be. This is going to be resistant because everybody who saw the $5 nudge happen, and then there was a large wallet who did sell a little bit more than anticipated, for whatever reason that they needed to sell, and then no buyers came in here, and so this was TXC liquidity cash came in and supported all sellers. So since there's been no buyers here, there's no support here, it's all resistance. So that's all that means as far as a giant red wall, dead supply wall, is that as the momentum comes up, that 420 to $5 resistance point is going to take a lot more momentum than it did the first time to get over. No, and again, insiders did not dump heavy, just nobody bought. That's everything that this chart's going to say is, oh man, everybody's dumping. But really, if you look at the volume and you look at the metrics and you look at the amount of people who are in the market, it is that there are no buy orders. Yeah, the millions of dollars that are being dumped was people that were taking advantage of the $5 nudge, and there was no buy, so it was just milking the liquidity supply that came in from TXC. If they wanted to grow, they would repeatedly unload at every rally. Oh, they wouldn't repeatedly unload. This zone is dead now. Yeah, so the $5 zone is going to be tough. need a new, lot more momentum this time. Breakdown is accelerating. Again, there is some uncertainty, which is creating less buying pressure, which means that the selling of the same amount of selling that was going on at 4 is still going on. It's the same. It's been consistent. Just the buying has shrunk, and the buyers have chased the price down more than anything. Promoters go quiet. Leadership begins damage control. Price falls into early accumulation zones. So yeah, it's a bad read on it because it doesn't know all of the specifics. And the guy came in and he did it the other day where he said, "Why is it an MLM?" It's a Ponzi scheme because it's going to crash. So I showed him how my chat GPT says it's not an MLM. It's not a Ponzi scheme. It's not classified as an LMM while still acknowledging why some people, and this is why this guy gets confused. TXC is a cryptocurrency with a blockchain and a mine. There are active mines being purchased. We see them. We see the videos of them. We see the pictures of them. You can go look at them yourselves and check them out. There is not a product-based recruitment company. MLMs follow specific legal structure. You have to sell a physical consumable product, and then you pay commissions based on multiple tiers of a downline requiring ongoing purchases, active participation. The reason that TXC is not an MLM is because there's plenty of people, majority of them, are not active. That completely ruins the whole MLM structure, and these people are still getting paid. You do not have to sell another seat. If you want to just be a miner, you can buy your miner, be done, and don't have to do anything else, and you still get the same commission as the person who is going around promoting it. It doesn't have any kind of checklist that you have to do to get to maintain your membership kind of thing. So TXC does none of those. TXC is a proof of work cryptocurrency, fixed supply, real block rewards, where coins are distributed through mining seats, not mandatory product purchases. Payouts come from the mine's daily block distribution, not from people below you. The commissions, if you participate in the affiliate program, that's where you get commissions. An MLM requires multiple levels of override commissions earning from your recruitment, and it's the trickle-down stuff. The commissions that are in TXC are the same throughout. So TXC multi-tier overrides, binary tree payouts, forced rank requirements, quotas. They don't have a quota, no recurring points to maintain that you have to. You don't have to do any of that. Lots of non-MLM companies also offer referral incentives and affiliate programs. Cash App, Coinbase, Robinhood, Binance, Uber, Airbnb, Webull, any other banking thing. Almost every app that you sign up says, hey, here's a referral link. If you can refer some people, we'll give you a bonus. It's the same thing. A single level referral program is not MLM structure. TXC mining payouts come from the block rewards, not from people joining. MLMs pay commissions from the new participants up. It fully depends solely on the new people coming in. We have less people coming in, but the mining rewards are the same. So that is not Ponzi, not an MLM, none of that. TXC mining rewards come from blockchain's program block reward distributed daily to all mining shares, regardless of whether new people sign in or not. So I just said. Mining output is algorithmic, not dependent on recruitment. This is fundamental and legal structural difference. Mining seats are finite and do not create infinite levels. MLMs rely on endless new signups because once signups stop, then the money stops. There is a fixed cap of seats. There is linear dilution. More seats sold, more as a lower distribution per seat. Doesn't matter how many you sell. It matters how much the total is sold. Once the mine sells out, the mining continues. No infinite chain of new people required. This disqualifies it from MLM classifications. No one is paid based on the purchases of people beneath them. Legal in TXC, a referrer gets a one-time bonus or added mining power. They do not receive ongoing commissions from spending from the others. They do not earn on levels. That makes it the same as any standard crypto referral program. The value proposition does not depend on recruitment. MLMs require recruitment to produce revenue. So why people often confuse the two, a referral program and mining seat purchase, on the surface level it could look like one, but it's not. So it is kind of one of the things is if you look for it, you'll find it. I can go into why mine breaks down the chart differently, and I probably will do that. I'm gonna work on my chat GPT to make sure that we can add in what we know now, because we did find out some things on the Zoom call last night that I have charted here. So what we found out was because of that bonus program, you saw this high demand. And then at the end of it, this drop off was from lack of orders. It's lack of orders, not increased selling. It is lack of buying supply. So I did this big, huge kind of arc that kind of overshadows it from point to point. Because if we could black out this entire chart and remove it, that this should never have existed, because this was based off of a reward program that was manually created from TXC having to come into the market and buy all this. What is nice is that there are other purchases and other coins that are in here. So on the algorithm side, there is going to be some support and resistance in here. That's great. That's created. We have that established price trend that we can look at forward. But this is not a strong support. There's not enough action here. And what I look at is, if I come in here where this was where the normal was before that, you look at the daily volume and it was 64,000, 44,000, and then we jumped up to 200,000 as things started getting more exciting. This is where we almost saw exponential growth happen at the end of August. So we went from 44, 79, 100 to 200. Big run up here. So this, I'm going to even give it that 100 to 200,000 was a normal range, because if we follow 121, 124, 108, 107 to 93, 113, 132, 123, 128, 141, getting exciting, 117, 189, 128, 125, 124, 234. Jumped up 100,000 on that. Was probably the start of when TXC was coming in to buy the coins. Obviously, they didn't come in and just place an order for all the coins. They were trying to buy it with a gradual increase. So it took from September 12th, where our volume went from 100 in the hundreds, and then the lower hundreds, like 100 to 130, to 234. Because then it went back to 132 the next day, where they probably let the market balance out and chill out and not go crazy. And then it jumped up for 2 days, and then it jumped up again to 243. That was probably another buy chunk to kind of see. And then the referral program started probably getting really big and heavy, and they saw that they needed a lot more. And that's where you saw 361, so which is double what it was 2 days ago. 389, again double. And then 275, which was about double still. 300 was double and a half almost. 244 kind of chilling out, like, hey, we don't want to overdo it. And then you saw 784, where there's probably on a mixture of, hey, we need to buy some more back up, and we don't want this to go from $7 to $2, which is where it was right here. It was 288. You don't want to go from 715 to 288 again. That's going to look real ugly. That looks like a pump and dump kind of thing. So there probably was, and then they also needed more coins again. So then they had to buy in, and this is why you saw 784, a complete anomaly. And then 300, as there's some support, 386. People got excited seeing 7, and there's probably some true buyers were coming in on this tail end of it. But overall, you probably saw a lot more people started taking profits and got excited, especially people who were not really into it for the project. They were into it for the commission rewards. Those are the people who are selling, because they don't see the vision. That they're not on the Zoom calls every day hearing how exciting things are getting. They're not looking on the social medias and seeing that the mines are getting built. They're purely looking at their wallet, seeing that there's dollars in there, and how do they turn that into their next project. A lot of those guys are going from one sales network to the next sales network, and they're just chasing the dollars, and they don't see the vision. So that's why this kind of has to not exist, because now we've created a lack of consistency, because where this was also very steep, now we went below it. So then we saw this big sell off, and this is from where the liquidity kind of stopped being injected. So now we're in this range. This is our new normal that we're trying to establish and build, and it's on the support track of, if we go to from this level to this level. And we're going to make this one be, oh, I'm going to make this be red so we see it. So this 217 is off of this candle right here, this first like wow candle where we saw the big grow at the end of July, beginning of August. Again, only on Bitmart. And I think at that time, actually, I don't know exactly when. It might have been MEXC. Somebody else added, I think, in August or September. I could have to go back and look at all the dates and stuff. But we see that this price zone is the normal trajectory of where we've gone. This part in July, August was the almost breakout into exponential growth. As you can see, we were going at this trend, and then we deviated and got really excited. And then on top of this excitement where we were almost in an exponential growth, there was a lot of sales were going. It was a euphoric moment of growth. And then that promo happened and it created this big spike, which has led down. Now that we know that this was promo driven and not, there's nobody dumping, that should give you some confidence that nobody's dumping. Everybody who was in here is still in. So look at where we're at. We are at the price that the linear trajectory projected based on all the way back in April from before the big excitement happened. So we're at the basically we call it the non-exciting price growth. We're still growing. And look at this trend is still building. We're looking to fill in this gap and go up, and we're building this momentum. That doesn't mean that exponential growth is out of the picture, because this blue line was when exponential started kicking in, and then this is when it was gone. So now we're back to linear, boring growth, and until something exciting happens, whether it be from sales increasing off of a promo, like it's done before. Promos can drive rallies, or just a new group come in and jump in, or this is one investor away coming in and could really push the price up with a lot of momentum, because the sellers are not that strong either. As much as we want to sit here and say the sellers are dumping and in control of the market, they have very weak control, because if you look at the exchanges, if we look at this, the Dex trade, the original, $1,000 would increase the price 2%. It would take $4,000 to decrease the price 2%. So right now we're at a point of support where buyers have the power. We just need $1,000 and the price is going to go up 2%. Sellers need almost $5,000 to bring it down. Look at MEXC. To drop it, it's only $1,300 because there's no orders. They don't even have accurate order books on here because they don't see it, or there's not enough that's not being reported. So let's look at Pinex real quick. To buy through this entire sell order book, it's $62, and the price instantly becomes $32 temporarily until there's no more orders filling up. On the downside, it's $50. So this is much more balanced. That's why you see a very true on the depth right here. This looks very mirrored. This is very balanced. But when you go to, say, Bitmart, who is the larger one that the liquidity is on, the market makers are using, and all that, and we look at we're balanced again, 42, 45%, 54, 55%. So at this price, there is a much, this is Bitcoin. That's awkward. But note that, and it even swings to where buyers go over 50%. Sellers are at 55, 49, 54. Look at buyers are stepping in 58%. So see that's Bitcoin. That's a big established one, and see how fast that changes. So now let's come and look at TXCs. And right now, buyers are outpacing the sellers. We have 57% of the orders on the book right now are buy orders at this price. This is where the buyers are stepping in. Until this pivots and swings, which is going to be back up here probably around $3, or I'm sorry, 240. It would take $10,000 to get the price $10,000 to get the price up to 240 with an average buy of 230, you would instantly be in profit. On the sell side, so you'd sell 5,000 coins, and you'd get $8,000 or 7,800 coins. There's some buyers that are coming in, but look at the price that they're trying to buy at. The buyers are trying to buy at 155. These low bargain prices are why the market is weak. This is weakness. This means that the price is going to see $2 until somebody steps in with some positive momentum, and you see market buy, market buy, market buy. Or when somebody comes in and takes out this price and says, I'm going to buy every coin that I can up to 230. Or what? 230. I'm dyslexic. And I'm going to say $1,000. I'm going to buy 433 TXC. It's going to get wiped out way before that because there's bigger orders before. But this order goes into the order book, and the algorithms see, oh, hey, there's some positive sentiment. Oh, just one. Okay, never mind. We thought people were coming to buy. If everybody's buy order is placed above this, the algorithms say, hey, something's going on. This is starting to turn positive. And the algorithms themselves will push up to say, hey, there's liquidity up here. People are wanting to buy up here. People are wanting to buy at 230 and 240. Right now, according to this, people are wanting to buy at 155. So you're going to see some dumping going on in order to get that. But hopefully they don't get reached. It would be a bummer to see these get filled, because if we go back here, and there should be some better support at 217, which looks like on Bitmart that's where we were. 212. So yeah, it's already down there. It hasn't updated over here yet. What do we got for our prices? 229 Dex, Bitmart says 230. So it is down from what we're reporting. Volume is down, and we're at this 217 level right now, which is this zone, and then the next zone is right here. And we'll even go to the bottom of it. Is 154. That's where those orders are. So those likely are probably algorithmic orders, or there's these guys that are trying to support their price and make sure that we don't come back down that low. And that would suck. It would give a lot of people the opportunity to accumulate a lot more coins. So unfortunately, as bad as the market looks when we're going down, it is also an opportunity to be able to get the coins more. The daily distributions are significantly down. Daily distributions are lower than a lot of people were expecting. That I hear that a lot from people that they wish that they were getting more coins still because they're only getting 0.4. Well, go buy 4. Go buy 4 for $12, and that would be the equivalent of 8, 9, 10 days of mining in one single purchase. But let's delete my lines real fast. Yeah, actually, I'll delete all of them real quick. Real fast. Let's go into this. And we'll see the Fibonacci retractment. So because of what I know that I don't really want to count any of the September and August, that break was in here, and the volume came down to 350 right here. What's this one? 360. 855, I'm not counting that one. 350, that one. 364. So this big wick is where I'm going to count where the market kind of balanced back in off the liquidity injection and go down to our low the other day. And now these are those zones that we have to see the price come through. And you see that once you get over 440, look at this big run that should happen. And that's based on the algorithms. The algorithms are going to push through that with the momentum of the buyers. So what we are looking for is 306 is a level we've seen a lot of, 332, 353, 374. We know that level from the liquidity injections for October was the goal. And then 404. We saw that this was resistant and we can never get over. So really crazy how Fibonacci numbers play the patterns of this even with a very limited market. It's because algorithms and stuff flow that way, and they have to move through these numbers to find liquidity, to find orders. So we will see this again as soon as buyers are confident. Could be, some people are going to say that they're waiting for sellers to lose confidence. It's more the issue that the market is waiting on is when are the buyers going to have confidence and um, and place those orders and start. The GameStop and AMC saga was slap to ask, buy at the market, just buy, don't look at the price. If you want to see this price over $4, as long as there's a 3 in front of it, you should buy as much as you can. If you want to see the price above $3 and there's a 2 in front of it, buy as much as you can. Trying to buy below the market is only creating a lower market. I will continue to echo that. This is not seller infused. This is buyer infused. The reason that the price is here is because of buyers, not because of sellers. So this is for the naysayers. The chart is kind of an ugly chart, but it hasn't been built yet. If you go look at Bitcoin's chart in its first 3 months, there was a lot of spikes and jumps and bumps around because it was not accessible for everybody. If you look at from the community involvement, I noticed in October is when people started buying and wanting to invest more. And it also is when the exchanges became active. Pionex and Biconomy and Weex, the U.S. friendly ones, got active in October, and so there's only been 3 months. If we Bitmart is not U.S. friendly. You're very limited in being able to trade with it if you don't follow their little loopholes. Dex Trade, you have to skip the KYC and then you have to do some odd transfers. They're not. Okay. Let's see. What day did Pionex list? October 24th. So this is the chart that we're trying to build and establish. The CoinMarketCap one is bolstered by limited users. Not everybody ran to Dex Trade and signed up because you had to skip the KYC. You had to buy Bitcoin, transfer that in, sell that, convert it to you. You had to convert it, and then you had to make sure you send at least $100. You couldn't come in and do a $10 transfer or a $50 transfer. You had to do a larger amount in. Otherwise it would get stuck in the void. Or you had to buy a little bit, transfer, and it was just hoops and loopholes. You can come directly into Pionex and buy if you wanted to with a debit card or with a bank transfer. I say that, and also want to remind everybody that Pionex does have a smaller banking system, and it is much faster if you use Coinbase, but this Coinbase has a larger bank. Buy on Coinbase, transfer into Pionex. That's the easiest, quickest way to get money that doesn't have to be placed on a hold. And then if you're wanting to take your money off, I suggest doing it the same way, just because, again, Pionex doesn't have a big enough bank to handle large amounts of stuff coming off and quantity through. So I do say that even though it is much easier and much better than Dex Trade, it is still not easy to just walk in and go swipe your card and buy. But here's our triangle that we're in. We're trying to break above this. Our moving averages are all right here. The daily moving averages on the 5-day, we're looking at 292 is the average. Got to break that zone first. 331 is a 10-day average. 30-day average is 355. This is the real chart to me. The CoinMarketCap chart is not as accurate because there was so much limitation of what was going on here. And then if you even go a step further, you look at what it was going on, we get to there. And this whole section is tough to include because it was promo driven. And then before it, all this, if we look at just this, this is a great looking chart. Everybody would love this if this is all we saw. You know, if we were looking at, oh my goodness, we went from here, and then we had a breakout attempt here. Make that one red. Look at that. That is beautiful. And then this is, you know, the break below that is, you know, where we lost it a little bit. You know, this was on the exponential growth side even, and we touched it right here and lost a little bit. So now we got to get back to this track, that red track eventually. So if it takes us till February to get up there, it might happen. But look, wouldn't everybody love seeing $6 and then being able to buy at 280 and in 3 months being able to double your money or triple your money if it goes higher? So still have a lot of confidence myself in the project. It does suck that these naysayers and I told you so people want to come out, but they're only here because the price is going down. If when back here, they did not exist. They were radio silent. If you look at what was going on here, nobody said a thing until the end of October. Radio silence on those naysayers. So just remember, they come out, and you know, there's a lot of people who have lost a little bit of confidence, and they don't like seeing the price going down so consistently. Understandable. It's a risky asset. Cryptocurrency is a risk asset. You know, you're buying into something that is very early, and the best thing I could tell you is if there's no risk, there's no reward. Greater the risk, greater the reward. You know, a famous investing guy out there that's pretty wealthy, you know, once said, "When there's blood in the streets, buy real estate." Buy real estate. When others are fearful, be greedy, and be fearful when others are greedy. You know, those are two Warren Buffett quotes. And so while everybody else is panicking, those who are buying right now are looking at taking on a high risk for potentially a very high reward. You know, as this thing gets back on track. So, you know, I would not abandon ship personally, but again, I understand where the fear comes in. I hope this addresses a lot of the talking points that everybody is afraid of. And I know I almost took an hour of your time, so I appreciate if you watch this entire thing. But there's just a lot to address. So I hope this clears things up for a lot of people. And if you have any other questions or want to understand better, whether it be the liquidity and how that's working, I'm going to try to do some research today and dig in to see some of the volume levels. I'm not going to go too crazy and try to find the wallets that are selling. I don't think it's any of that. But you know, I would like to see what a simulated actual price would be of TXC without that promo event that caused that rally. So I'll do some research today. I'm not afraid. Obviously, I'm disappointed. I would love to see this price at $6 today and not $2.80. You know, I'm sitting here on. I had all those orders placed just in case we had a rally on the Zoom call. Wasn't expecting them to hit, but no rally. I have all my bots still active. I have 9 bots, and they are all down. They're all down here, and that's because the price has gone down. We need price to break above. Probably, let's just see. I probably won't see much profit until that line is broke. We got to get above 3 first. So as we can see, 3 is a support price, and this is where we're at. So, and then when Bobby does the math and tells you how much money we've spent on the mines and what we've built and everything, and you take that percentage of where we're at, this is a true value of where TXC is in this $2 to $3 range. And that's why the buyers are only buying it based off what's been built. So Bobby went out and bought more. That's on its way. It's coming. It's on the boat. It's coming here. That value is going to come once those are all established. Hey, guess what? This is realistically much more valuable than what it is today. So those who believe will see the price go up are the ones that are going to be able to take advantage of of the reward. So we'll see. Now, financial advice. I'm still here. I'm not selling. I'm not abandoning ship. I think the naysayers are comical at this point. I've seen them in stocks and I've seen them in crypto before. The message boards are funny. Just remember that they probably weren't invested. First, they missed out because of the rally went before they were. And when they missed out, they looked for the first opportunity to say, I told you so. I wasn't wrong. I didn't get in there because I knew it was going to zero. And then when it goes up, they're going to turn around and say, you got lucky. So ignore those fools. Do your own research. And just remember, if you are using ChatGPT for your research, you have to guide it in the beginning. Unless you're using it frequently, it's going to take multiple commands. There is research out there for you to see and give you some confidence. And if you jumped into this with the expectations of getting rich quick, probably wasn't built that way. So if you need any other help, wanting any reassurance, or wanting me to investigate or break down anything, I'm more than willing to help you out. And make sure that you have the confidence in where you're at, because nobody wants to be unsure of things. So before I take another hour, I'm going to jump off here and end this. I hope everyone has a great day. I'll see you guys on the next one.